Treasury market changed a little bit. As the stock market got weak, we expected the bid to come in for the Treasuries, and it did. Thing is that the magnitude of the advance in the further out the curve in the 20s and 30s was very strong, and that is giving some indication that the time frame for the any kind of a decline, which we believe is going to be October, may be a time frame where the decline isn't as big as we originally had thought. So the overall, I'll show you that in the charts, but it doesn't change the timing it really by very much. It really does, though, potentially change the magnitude. Let's go to TNX, and you'll get an idea of what the change in magnitude means. So nothing much changes here, right? You can see that it's still, the momentum is strong for yields, and that the next couple of weeks, it's likely the yields will make their bottom and then begin to move up again. When you look over here, now we put a shallower track in here. The market is telling us to do so. Still, we're at an important support area, and maybe if it dips around in the next couple days, the stock market probably didn't make its low. And if it falls again, these yields are going to fall again. But then you see that there's a potential setting up for the bond market to decline again, or based on these yields, then moving up. So right now we're in a good support area for yields, and I think it's proving the support area when you look at that. So if the next couple of weeks looks like yields are gonna go to the downside potentially a little bit, maybe the next week, then you probably get another week or so where you could get a move up in the bond market. Let's look at the 10 years first. So there's a bit of ambiguity in here, and I want to clear that up. So this low over here seems a bit out of place. These lows here might have finished these cycles in here, and it certainly looks like it on the 30-year. But it doesn't look like it on the 10-year at all. And the 10-year looks to me like you're going to get potentially higher yields somewhere out over here. So you get a little bit more rally, and then it begins to come down over here. This is where the next daily low falls, over there in around the third week of October. That aligns with everything, but the configurations of the cycles don't allow for this to come down by a lot. It just might be a test of these levels down over here, and then move up again. I see this all as a very choppy area, and then out towards the end of the year and into early next year is where I think there's a big interest rate spike coming out there, and that of course may not be good for a lot of the markets. So we'll look for a little bit of rally in here, and then moving to the downside. That is reflected right in here, where you see a little bit of rally on the daily chart, and then moving to the downside. Now this really looks like the formation of a bearish pennant after this decline, and this head and shoulders in here forming. It needs to break under 132.23 to confirm that, but then you get into this period over here of risk into October. So there's risk into October, and then there's a potential rally, and then a lot of risk at the end of the year for the bond market into the beginning of next year when we look at that. Now, we're moving down the curve here to the 20s, and this is a little better. Now, again, the same thing. Is this the low over here, or this is not as low? And that none of this really makes that much sense to me, with the potential for the next daily low over here, and this may be coming down and testing that area. So we have a lot of chop in here potentially, and then ultimately, again, December through February is a period of risk, and you can see we are now showing that here on the chart. So potential large upward spike in interest rates, December to February, and keep that in mind, because I don't think the stock market's going to like that if that happens. So resistance over here at this peak, about 152.70.65, and gets up near there right here, and then starts to pull back again. And you can see likely you're going to continue to do the same thing, chop around in here, get a breakdown into October, another rally, and then a lot of risk coming into the market. So we see a lot of chop in here when you look at this. Maybe for the next few days, I don't think the stock market's done going down. So this probably gets a little bit more of an uptick in there on a safety bid, and then begins to move back to the downside. /ZB. This one, which is the furthest down the curve that we look, it looks a little bit to me, that's not what I want. That's what I want. Looks more to me, based on these cycle phasing, like the cycle low is in, or it's going to get tested again in that bottom of that next daily cycle that we pointed out. Again, we could see some rally period coming out here into October, November, after that October test of the low, and then a lot of risk coming later in the year. The dominant cycle right over here, joining and nesting over here, that is a period of a lot of risk. You can, if you look right over here, of course, this was the pandemic, so you got this huge move from 91 over here down to 70. So that was a 20-point drop where they were nesting right in there. Here, where they were nesting right here, you can see there was just a ton of pressure, where the final move to the downside was about 6 to 8 weeks, and it fell very hard, down 136 at here. This was basically 146. So that's at least a 10-point move to the downside, and likely more out over here. So the risks are just extremely high going out in towards the end of the year and into the early part of next year. The daily chart right over here, pretty similar, but you can see it's starting to get an upward slant to here. It's a little early to tell. Maybe it's just this sideways movement. Again, we're looking for a decline out here into October, a rally then into November, maybe early December, and then that big period of risk coming in the bond market. So looking, kind of giving you some summation on all of this, it really looks to me like we're going to see a choppy bond market right over here. And then I'm going to guess that Fed actions, or the market anticipating Fed actions, are going to really hurt this market coming into the early part of next year. We'll just say December through January, February are just a very risky period, and for a spike to the upside in interest rates and a break to the downside in the Treasury market. This is our level 4 special trial. This is for first-time subscribers and upgrades. What level 4 gets, and this is really an advanced level, is our annotated charts. That's our entire focused list live on your Thinkorswim platform. If you are not a Thinkorswim member, you can go to our site and you can open an account there, and then that would be great because we get credit for that. So Thinkorswim, TD Ameritrade is our preferred broker, and we'd love you to open up an account there to get our annotated charts. This is all of our analysis. On top of that, you get our proprietary studies, our option bias indicator, the market condition indicator, and you're going to get the grids that we have with 4 different time frames with our indicators on there. It's just incredible. You will also get the archive with all of our grids, with our trade ideas that include the slim ribbon PO, the reversal scout. Nobody else has these. These are our proprietary indicators that keep you on the right side of the market and give you an understanding of the market that it's really hard to get with any other combination of studies. You will love this. You'll get our free live events, webinars, trade planning services, best practices for utilizing AskSlim custom charts and studies. And you'll get our full membership access to everything in level 3, 2, and 1. There is too much for me to tell you about there. You can go to the website and see everything that is included. This is a special 3-month trial. Level 4, 35% off for quarterly. that are normally we're at $159 a month, but you can have it for $101.25 a month for signing up for 3 months for level 4. All of this, these live charts, absolutely great. And there is one more thing that's really important. Our level 4 plus is a little bit different. This is again for first time subs and upgrades, and we only have 10 spots available. Last time we did this, you have to get on a waiting list, and we had a huge waiting list, and we filled up in a couple of days. So we now have gotten better at it. We have these spots that have opened up, and we are going to take 10 more people. So what you get are custom chart requests. Everything that we showed you in level 4, you get, but you'll be able to ask us for our cycle analysis on any 2 symbols per week of your choice. You'll get the SLIM daily and weekly charts to open up on your Thinkorswim platform, and you'll be able to see these specific symbols that you have interested in that we have provided to you, that has our cycle analysis, timing, key levels, projections, all of that. And you get access to the full archive of all the requests of all of the level 4 plus members. So we get tons of those every day, and we post them and we share that analysis. It is one of the greatest resources of analysis that you will ever see. There's like 5 or 10 new ones up there a day. It's just crazy how much information this is. And you get our exclusive trader support from the SLIM analytical team. That's Matt, Harvey, and I. We have, I have 47 years of experience in this. These other 2 guys are incredibly skilled. You can ask general questions around trading issues, trade planning, and chart analysis. And you get the full access to everything in level 4, 3, 2, and 1. This is normally $239 a month because you're getting our one-on-one help, and that's why we have to limit it to the number of people that we take, and we only have these 10 spots available now. So that the special price on that now is $465. That's only $155 a month. Imagine paying an analyst, somebody who you had that type of access to. With our experience, you could never get it for this price. So it's you can only use this special one time. $465 for 3 months, $155 a month is what that comes out to. You must reserve your spot because it's going to be first come, first serve, and I'm telling you it's going to fill up quickly. So write to matt@askslim.com. If you're not a TOS user, you don't have a TDA Ameritrade account, then please do open one up through our site. Just a little example right over here. This is what a custom chart looks like. Somebody requested that, so this just recently got posted up on our site for the level 4 plus members. This is on target. You get the weekly analysis, and you can see the dominant cycle, the minor cycles, the important support areas. We talk about the configuration of the cycles, projections, the momentum indicator that's in there, and you can see in here in target, this is pointing to a correction coming in the next month. But this is a bullish pattern and then likely moving up again. Here you could see on the minor cycle on the daily, momentum has turned negative. The slim ribbon PO giving negative signals. So negative momentum here, likely decline over here in target. And this point shows you where the next date is, where there's an alignment between the daily chart and the weekly chart, nested area right over there. This goes out here another 3-4 weeks, and that will likely be a point where you could start looking at the support zone and where to buy it. This is a just unbelievably great way for you to get a feel for stocks that you probably will have never had before, and ETFs and futures. We do it all. We look at 24 plus different futures contracts and market indexes, plus well over 400 stocks. Plus we'll bring in anyone that you ask us for that we can do this kind of analysis. So this is that great example of that. Please do go to AskSlim.com, get yourself on this waiting list, reserve your spot for this level 4 or level 4 plus, or you could just sign up for level 4 right now. And you won't have the one-on-one custom support from the team, but you'll get everything else also. And again, there's great charts that you see right over there.